Selling a home can be a very rewarding and lucrative decision. However, in some cases, you may be subject to paying capital gains taxes. Here are the most important things you need to know about capital gains taxes and how to avoid them. What are capital gains taxes? Investopedia defines capital gains taxes as a tax on the growth in value of investments incurred when individuals and corporations sell those investments. Therefore, if you sell your home for more than you bought it for, the difference would be those capital gains. Capital gains in real estate. There is some good news for sellers. You can be exempt from paying capital gains taxes on the first $250,000 if you're a single person and $500,000 if you're a couple. However, additional rules do apply. To qualify for the exemption, the house must be your primary residence. Furthermore, you have had to have lived in the house for at least 2 out of the last 5 years. Certain exemptions apply for people with disabilities or for veterans. Let me give you an example. Let's say you bought a home for $100,000. And then you go and sell it for $250,000. Your profit on that is $150,000. In this case, you won't owe any capital gains, whether you're an individual or filing jointly with your spouse. Here's another example. Perhaps you bought a home for $200,000 and then the market went crazy and you're able to sell it for $850,000. In this scenario, let's say you're a single person. You would be exempt from paying the first $250,000 on that profit. So out of your $650,000, you would have to pay taxes on $400,000 of it. Let's say we used a married couple filing jointly in the same scenario. We would get a different result. That couple would be exempt from paying taxes on the first $500,000 of their $650,000 profit. Therefore, they would only be responsible for paying taxes on $150,000 of their profit. Here are some of the best ways to avoid these capital gains taxes. These methods are not feasible for all homeowners. It kind of depends on your economic and marital status. If you're able to live in the home for 2 years, it will save you a lot, if not all, of the capital gains. Furthermore, if you're married and filing jointly, you will be able to double your exemption from $250,000 to $500,000. Omaha, Nebraska capital gains taxes. If you're not exempt from paying all of your capital gains taxes, you will have to pay to both the federal government and the state. For federal taxes, the capital gains amount is 0%, 15%, or 20%, depending on your income level. For state taxes, capital gains vary from state to state. In Nebraska, your capital gains are taxed at the same amount as your income taxes. Depending on your income, this can be up to 6.8% for Nebraska capital gains taxes. How to boost your exemption. If you've lived in your home for years, you've probably paid into renovations and repairs on the home. The good news is that you can use these to lower your capital gains tax liability. For every dollar that you've spent renovating and repairing your home, you can add it to the purchase price of your home. It's important to keep all records and receipts of any repairs and renovations that you've made. This will help you get the most exemptions possible. Hire someone to do your taxes. Working with a reputable, certified public accountant can be a great way to help you out with your taxes. Yes, it may cost you a couple $100s, but their knowledge and expertise can help save you thousands of dollars in the end. Ideally, you want to work with a CPA who has experience working with real estate investors. They will know the ins and outs of capital gains taxes to save you the most money. If you're considering selling your Omaha home but don't want to deal with the hassle of figuring out capital gains taxes, give us a call. We'd be happy to see if we can help you out just like we've helped dozens of homeowners in Omaha. To find out more, check out our website at kittyandfrank.com.